Hello and welcome to Gradient's weekly roundup of key business and financial developments in Sri Lanka for the week ending 11th March 2022. I'm Nishani Figuera. Here are the top stories for this week. Central Bank floats the rupee as rates hiked for the second time. SU defers Sri Lanka's $900 million payment by 2 months. Gas shortages loom amid dollar crisis. Power cuts persist for the third consecutive week. Tourism numbers increase, but UK travel advisory cautions of country situation. We will also briefly look at other notable news that made it across to our news desk and wrap up with the capital markets update. In our main story this week, the central bank floated the Sri Lankan rupee, with forex transactions being quoted at a record 240 to 255 rupees per US dollar. The long overdue adjustment was made on Tuesday as the country's forex reserves continued to deplete, falling to $2.4 billion in February, which had been periodically used to sustain the rupee to dollar peg. Late last week, the central bank hiked policy rates for the second time in the year, increasing the standing deposit and lending facility rates by 100 basis points each to 6.5% and 7.5% respectively. It noted that such action was taken after carefully considering the current and expected macroeconomic developments globally and domestically. Interest rates caps on credit cards were revised upwards to 20% per annum, 18% on pre-arranged temporary overdrafts, and 12% on pawning facilities. However, Dr. W.A. Vijayawardena, former Deputy Governor of the Central Bank, said the interest rate hike is not sufficient with inflation at 15% and the high budget deficit. Reuters reports, citing multiple sources, that following a request by Sri Lanka's central bank, it received a 2-month deferral for $900 million in payments due this week from the Asian Clearing House. This includes $509 million owed to the Reserve Bank of India, which was initially deferred in mid-January. This provides Sri Lanka with a short-term breathing space as foreign exchange reserves have continued to fall, declining to $2.4 billion as at February 2022, down 2% from a month earlier. Additionally, the government restricted the import of 367 items, including items such as milk products, fruits, and fish, considered as non-essential to address the forex shortage. Signs of a re-emerging LP gas shortage in the country prevails as suppliers note that banks wouldn't open letters of credit for imports. WKH Vegapitiya, chairman of Loves Gas, speaking to Economy Next, said that a serious shortage of gas will be seen as supplies are available only for 1 or 2 days at the port. He further added that Loves, which issues about 40,000 gas cylinders a day, is struggling to distribute even 2,000. Reuters reported, citing an industry association, that nearly 1,000 bakeries have closed across the country due to the shortage of cooking gas. Loves Gas controls around 20% of the LP gas market in Sri Lanka, while the state-owned Litro supplies 80%. Power cuts persisted in the country for the third consecutive week as electricity generation continued to be hampered by limited diesel supplies and several plants being under repair. Supplies are coming in, with the Indian Oil Corporation stating that it would supply 12 to 13 parcels of fuel over the next 4 to 5 months to the Ceylon Petroleum Corporation under the $500 million line of credit extended by India to Sri Lanka for purchase of fuel. The current situation has been aggravated due to the conflict in Ukraine, increasing crude oil prices to $111 per barrel, however down from 130 levels. Meanwhile, Basil Rajapaksa, Minister of Finance, requested several governors to reduce electricity usage in public spaces by a minimum of 20% at local government authorities. This adds to all government officers also being asked to reduce consumption. In other news, according to the SLTDA, 25,511 tourists arrived in the country in the first week of March, increasing the cumulative figure for the year to cover 203,000. Russia continued to be the main source market, followed by India, the UK, Ukraine and Germany. The ongoing Russia-Ukraine crisis is likely to cause a decline in arrivals over the next weeks. Meanwhile, the government of the United Kingdom cautioned its citizens from travelling to Sri Lanka. It noted a deteriorating economic situation with shortages of basic necessities and the possibility of long queues at grocery stores, gas stations and pharmacies, as well as the likelihood of local authorities rationing electricity, resulting in power outages. The cabinet approved the granting of long-term visas to tourists investing in Sri Lanka. The program is known as Golden Paradise. Sri Lanka tea prices reached a record high, increasing to an average 725 rupees per kilo in February. However, Forbes & Walker, a Colombo-based tea brokerage, warned that trading conditions are likely to be strained and additional war risk surcharges would further escalate high logistic rates, which have already adversely impacted tea prices. Such sentiments were seen as Sri Lanka sold only 4.98 million kilos of tea at the auction on the 1st and 2nd of March, down from 6 million kilograms a week earlier. Further, Sri Lanka's tea exports fell 6.9% in January 2022 to 19.38 million kilos, with Russia being the second largest buyer with 2.5 million kilos, roughly a 12.5% share. In a significant move to attract remittances via formal channels, Dalasaraha Peruma cabinet spokesman stated that the cabinet had approved a 38 rupee incentive to expat workers in place of the current 10 rupees. Further, cabinet approval was also given for a payment of an extra 30 rupees per US dollar on export earnings over the previous quarter to companies that achieved at least 10% export growth over the corresponding quarter of the previous year. Ever since CBSL decided to peg the exchange rate, foreign workers' remittances had been continuously falling, declining to a 13-year low of $259.2 million US dollars, down 61.6% year-on-year. Now let's take a look at the weekly movement of the oil share price index and the S&P SL 20 index at the Colombo Stock Exchange. In other market news, considered as South Asia's largest cement manufacturing facility, Langwa Sanstar Cement Corporation was declared open by President Gotabaya Rajapaksa and Prime Minister Mahinda Rajapaksa. Spanning across 63 acres and located in the Magampura Lanka industrial zone, the $100 million US investment will operate with a capacity of 4 million metric tons per annum. SoftLogic Holdings entered into a sale and purchase agreement for the acquisition of a 100% stake in Agora, a Bangladesh-based retail superstore. Agora operates a chain of hypermarkets, discount departments and grocery stores and is slated as the country's second largest supermarket. Phoenix Ventures subsidiary Grafio once signed an agreement with the Board of Investments to set up an office complex. The company is said to have committed fresh investments of $25.18 million US dollars towards the project and is to be located on Galle Road, Colombo 3. And that's a wrap for this week. Follow us on LinkedIn and YouTube for more updates on business and financial developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.